Hello again and welcome. For those of you who have just joined us, I'm Flavio Menezes, a professor of economics here at UQ. I would like to ask Professor Andrew Griffiths, the Executive Dean of the Business, Economics and Law Faculty, to do the Acknowledge of Country, followed by a short welcome by the Head of School of Economics, Professor Daniel Zizzo. Andrew, up to you.
Great, thank you, Flavio. And I'd also like to say good afternoon to everyone, and thank you for joining us for this sort of special event. I'd start off by acknowledging country, and I think the University of Queensland acknowledges the traditional owners and their custodianship on the lands on which we meet. We pay our respects to their ancestors and their descendants who continue cultural and spiritual connections to country. We recognise their valuable contributions to Australian and global society. I think that's a really pertinent reminder when we look at what's happening today with this thought leadership event. The Productivity Commission released its report on Overcoming Indigenous Disadvantage in December 2020. The report measures the wellbeing of Aboriginal and Torres Strait Islander people across a range of indicators, including education and training, healthy lives, economic participation, and safe and supportive communities. While the report highlighted where there were many positive outcomes that have been improved, it also demonstrated that there were many challenges remaining to close the gap in Indigenous disadvantage. In this inaugural UQ Economics Thought Leadership event, academic experts in economic policy will deliver their analysis and insights on improving economic participation to overcoming Indigenous disadvantage. Our ultimate goal through this thought event symposium is that conversations like those that are taking place through this event will lead to more research, including from and with Indigenous researchers that can help shape meaningful, positive policy initiatives. Thank you, and I hope that you enjoy this afternoon. I'd now like to introduce Professor Daniel Zizzo, the head of the School of Economics, who will go through the order of events.
Hello, everyone. I too acknowledge the traditional owners and their custodianships of the lands on which we meet virtually today. And I'm here to add my welcome to this inaugural Economics for Leadership series event and say something about the order of proceedings. We are acutely aware of the challenges facing the well-being of Aboriginal and Torres Strait Islander peoples, and we saw the topic of today's event as being of great importance to focus on. And it's just an example of initiatives that, as a School of Economics, we are currently doing in this space. For example, we're keen to support the development of Aboriginal and Torres Strait Islander professional economists, and we're engaging in a series of initiatives to encourage and support Aboriginal and Torres Strait Islander students to move to the next step of their economic studies. For example, we found a living expenses scholarship for an Indigenous student to take up a PhD economics with us, and we are in the planning stage for fundraising for Indigenous postgraduate grants in addition to the scholarships that we currently offer. This afternoon, we have an outstanding speaker lineup. Our first and third speakers, Professor Flavio Menezes and Professor John Quiggin, are professors in the UQ School of Economics. Our second speaker, Dr. Charlene Leroy-Dyer, is Associate Director for Indigenous Engagement at UQ Business School. She's a saltwater woman with family ties to the Darug, Awabakal, Garigal, and Wiradjuri peoples of New South Wales. Our fourth speaker is Professor Robin Quiggin, and is Associate Dean Indigenous Leadership and Engagement at UTS Business School. She is a Wiradjuri lawyer and on the board of the New South Wales Aboriginal Housing Office. Each speaker will have about 10 minutes, and then we will have some time for Q&A, for which we recommend you use the Q&A function rather than the chat function in Zoom. And I should also note that this session is being recorded. Anyway, without further ado, welcome to today's event, and Flavio, the virtual floor is yours. Thank you.
Thanks, Daniel. I will spend a couple of minutes providing an overview of the Productivity Commission report, and then present some of the data on economic participation. You can see a copy of the report, of the cover of the report here on the left-hand side. It's really the 8th report in a series commissioned by all Australian governments, designed to measure progress in improving the well-being of Indigenous people. It's the first report under the stewardship of Bromley Mokak, the first full-time Indigenous Policy Evaluation Commissioner of the Productivity Commission. And the report makes the point that the history of Indigenous people since colonization and the intergenerational and ongoing effect on them need to be acknowledged and understood when considering the outcomes in this report. Also, understanding the outcomes require a knowledge of where Indigenous people live and the diversity. And Charlene will talk more about this, but I'll simply mention that while most Indigenous people live in major cities or regional areas, they are significantly overrepresented in the population who live in remote and very remote areas. So it's 30% in these areas compared to, say, 3.3% across the whole country. And this obviously has implications for economic participation. There are 52 indicators in the report, and I'll just show you now. This is scorecard here on the right-hand side of my slides, and that really summarizes the outcomes. And there's a color scheme with green meaning that some progress has been achieved. And the number here, besides the indicator, refers to the section in the report. The report is extensive, but our focus today is on economic participation. So let me start by defining economic participation, which usually refers to an individual's engagement in work and or education, and the access to economic resources that result from such participation. The Productivity Commission report looks at outcomes across employment, land and business ownership, home ownership, and income support. So let me start with employment outcomes. And as this figure here suggests, there has been little change in full-time employment over the past 15 years, although the gap with non-Indigenous people has narrowed, but has narrowed because full-time employment decreased for non-Indigenous people. Full-time employment has increased in very remote areas, while part-time work has decreased, but it's difficult to interpret these results, as the definition of employment now includes some schemes and excludes other schemes. Most Indigenous people work in the private sector, but the public sector has a higher share of Indigenous employees. Occupations that Indigenous people are employed in are more likely to be lower paid than those in which non-Indigenous people are employed. Land and waters ownership or rights, self-employment and business ownership can lead to autonomy and economic independence for all people. Control over assets is a means of wealth creation for communities and families, and it can deliver increased income and employment. From these figures, we can see that Indigenous people currently own or control about 15% of the land area of Australia. And of that, almost 40% are the native title rights, and 33% is covered by Indigenous land use agreements. I should say, though, that most of the land is in very remote areas where it has a lower commercial value and higher transaction costs. The proportion of land covered by native title and or Indigenous land use agreements has increased over time, but direct ownership or control over land has remained unchanged. Also, the number of Indigenous people in business or self-employment appears to have grown, but as a fraction of those employed the number remains the same. Those who are working for financial gain are less likely to be in business or be self-employed than non-Indigenous people, though the gap seems to be narrowing. Home ownership is an important indicator of wealth and saving. It also provides security of tenure and allows greater control over living arrangements, which are important for improving people's lives. This figure shows the proportion of Indigenous households that owned or were purchasing the home by Indigenous region in 2016, with lighter colors meaning lower proportions of ownership. From the data, we conclude that in 1819, 1 in 3 Indigenous households owned or were purchasing a home, and about 3 in 10 Indigenous adults lived in a home owned by a household member, and the same as over the past 10 to 15 years. For Indigenous adults, a higher proportions were living in homes owned by a household member in major cities and in regional areas than in more remote areas. While the fraction living in a home owned by a household member is lower than for non-Indigenous adults, the gap seems to be decreasing over time. A person's well-being is influenced by many factors, but certainly having an adequate income remains an essential component of individual and household well-being. Income support aims to support people who cannot or cannot fully support themselves. In 1819, government pensions and allowances and employee income were jointly the main source of personal cash income for Indigenous people. Indigenous people continue to be overrepresented in the income support system across the selected income support payment types. So this is the disability support pension, the parenting payment single, and the New Start allowance. Let me conclude by recognizing that economic participation outcomes are influenced by and influence other outcomes, such as governance, leadership and culture, early childhood development, education, training, health. There's plenty of evidence in the literature that more education leads to increased lifetime earnings, that is, increased benefits from economic participation, but also leads to better health outcomes and improvements in other measures of well-being. Charlene will talk about education and employment. Also, improving financial literacy facilitates and supports individuals, families, and communities to progressively achieve greater financial security and independence. Robin will cover financial literacy. And finally, John will make the case for income support as an effective instrument of economic participation. So thank you for listening. I'll now hand over to Charlene to present on closing the gap on Indigenous disadvantage in education and employment. Thank you.
Thanks, Flavio. Warimi Ngani, Naya Charlene Leroy Dyer, Darug Rajari Awabakul Gadigal. I'd like to acknowledge that I am presenting to you today from the sovereign lands of the Gubbi Gubbi people and pay my respect to elders past, present and emerging. This is, was and always will be Aboriginal land. Aboriginal and Torres Strait Islander peoples hold a unique position in Australian society, yet they are the most disadvantaged group in the community. This disadvantage is a direct result of European invasion and the systematic exclusion from many institutions in Australia. Aboriginal and Torres Strait Islander peoples are not a homogenous group. There are over 600 nations throughout Australia, each with its own territory, language and custom. The disadvantage experienced by Aboriginal and Torres Strait Islander peoples in employment, health, housing and education is a consequence of widespread destruction of our traditional economic and cultural activities, the dispossession of our lands and waterways, and subsequent exclusion from mainstream society. This exclusion has led to Aboriginal and Torres Strait Islander peoples being marginalised. Aboriginal and Torres Strait Islander disadvantage is compounded by relatively low health standards, low levels of educational attainment, and being in remote areas where opportunities for jobs are largely absent. Neither Aboriginal or Torres Strait Islander labour force participation rates nor the unemployment rate compares favourably to the equivalent non-Indigenous rates. Relatively high unemployment rates and relatively long unemployment durations entail adverse social consequences, including being victims of crime, not engaging in training or study, or being prone to health problems. Labour market participation rates, job-related skills, qualifications, and income are all well below that of our non-Indigenous population. We are more likely than non-Indigenous people to be unemployed. In fact, the unemployment rate for Aboriginal and Torres Strait Islander peoples is 3 times the national average. Since the 1967 referendum, successive governments have attempted to correct past policies of exclusion by being proactive in promoting Indigenous education and employment. However, these have had limited success. Excuse me for a minute, I'm just going to try and get rid of, no, I will just continue, it's all right. In March 2009, the federal government announced its newest initiative to reform and improve Indigenous disadvantage. The Closing the Gap is a commitment to all Australian governments to improve the lives of Aboriginal and Torres Strait Islander peoples. COAG set 6 high-level targets for closing the gap. One target was to halve the employment outcomes within a decade. That was by 2018. This did not happen. The 2020 Closing the Gap report showed the employment gap widening, and it remains wide today. And this brings to a question of why. Despite the well-meaning efforts of successive governments in labour market programs, have not made significant inroads to reduce our disadvantage. There's been substantial research documenting the enormous difficulties of getting disadvantaged job seekers into sustainable employment. Long-term unemployed are often overlooked by potential employers, which creates equity and social justice issues. This group are disproportionately made up of people with low skills and education, such as Aboriginal and Torres Strait Islander peoples. So structural disadvantage, such as the history of marginalisation and exclusion, have exacerbated our problems. The under-resourcing of Aboriginal and Torres Strait Islander education has also contributed to low levels of English literacy over many decades. Low levels of educational attainment can create huge obstacles to participation in employment. For some Aboriginal and Torres Strait Islander peoples, inadequate literacy and numeracy combined with long-term unemployment can put even low-skilled occupations out of reach. Research has shown that the higher the education levels, the more probability of improved employment outcomes. Another misconception is that Aboriginal and Torres Strait Islander peoples have such low skill level that they are unable to perform any job well. However, this is not the case. Aboriginal people want to work, they want to learn, and when they're given the chance to do so, they exceed. We see that discrimination plays a really big factor in preventing Aboriginal and Torres Strait Islander peoples from being meaningfully employed. Aboriginal and Torres Strait Islander peoples are far more likely to hold lower status, low-paid jobs with less chance of training and promotion and less career opportunities. We are far less likely to be successful in attaining the kind of job we want, and it's not always due to lack of education. A lot of research has indicated that prejudices against certain groups play a role in this. And that's certainly the case when it comes to minority groups and Aboriginal and Torres Strait Islander peoples. So discriminative practices are socially constructed and involve racialised discourse which stereotypes and stigmatises minority groups. There's no quick fix or one approach to reduce the labour market disadvantage faced by Aboriginal and Torres Strait Islander peoples. There are interconnecting factors that contribute to this disadvantage. These include low levels of education, poor health, inadequate housing, intergenerational trauma, genocide, and deaths in custody. The disadvantage that we face is multidimensional and intergenerational. Research has shown that the way to close the gap on labour market disadvantage is to keep the focus on education, and that is school participation, retention, and adult education. A higher proportion of Aboriginal and Torres Strait Islander peoples participate in vocational training than non-Indigenous Australians. However, we are more likely to compete lower levels of education. Aboriginal and Torres Strait Islander peoples with degrees have employment outcomes largely on par with those of their non-Indigenous counterparts. However, workplace discrimination plays a really important role here, and it has negative impacts. The former Australian of the Year, Mick Dobson, states that adult literacy is the key to closing the gap between Indigenous and non-Indigenous Australia. Through Aboriginal and Torres Strait Islander participation and attainment in education and training, significant skill gaps still exist, even though we do participate. Dodson states that education must be the main focus if the gap is to be closed. However, education is only one component. There also needs to be labour market programs that are individualised to the needs of Aboriginal and Torres Strait Islander peoples, not a one-size-fits-all approach. Government policy is the key to closing the gap on labour market disadvantage. However, the majority of labour market programs previously implemented have failed to produce any results. This can be attributed to the government ignoring the dominant political philosophy of self-determination held by Aboriginal peoples, and that programs that they put out have an Anglo-centric focus as opposed to an Indigenous-centric focus. Employment programs that have an Anglo-centric focus are flawed by a whiteness view. Distinguished Professor Aileen Moulton-Robinson argues that whiteness is a construct of the West. It is an invisible regime of power that secures hegemony through discourse and has material effects in everyday life. Policies entrenched in whiteness do not adequately address social and economic issues and do not contribute to self-determination of Aboriginal and Torres Strait Islander peoples. In addition to labour market programs, private sector organisations need to play a role in reducing labour market disadvantage by adopting policies and strategies that assist Aboriginal peoples into employment. Private sector organisations have a range of strategies at their disposal to do this, such as reconciliation action plans and Aboriginal and Torres Strait Islander employment strategies. When they are implemented correctly, these can reduce labour market disadvantage. Organisations need to make a commitment to ensure that their culture encourages diversity, respects and values cultures of Aboriginal and Torres Strait Islander peoples, and accommodates cultural differences wherever possible in policies and practices, while still ensuring that they use the principles of self-determination, social justice, equal partnership and equality. Yanu Gidjarigura, thank you for listening to me. I'll now pass over to Professor Robin Quicken, who will speak on financial capability and economic participation.
Thank you, Charlene. I'm just going to share my screen as well and kick off. Speaking about, as Charlene said, improving economic participation through financial capability and economic development. I want to begin by acknowledging the traditional owners of the land on which we all meet. I am currently on the land of the Gumbaynggirr people. I am the grateful guest of those people. I am Wiradjuri by descent, and this is not my country. And I'm very, aware every day that I am the guest of the Gumbaynggirr people, and I'm grateful for that. I want to thank Andrew, Daniel for the lovely welcome to your school, virtual welcome to your school. Thank Flavio for the summary of the Overcoming Indigenous Disadvantage paper, which is a really important report on how we're going, how the nation's going, and thank Charlene for those great insights. And my experience, and I'm not an expert on employment as she is, but all my experience in this space absolutely speaks to all the issues that Charlene raised. I think my experience is absolutely that education is incredibly important, and what I'm going to talk to you a bit about is the fact that education, when it comes to financial capability, education has to be met by the financial services sector taking up its role in relation to its customers and members. So I'm going to talk to you a bit about that. And when we, my view, from my view, all of us on the gallery view are kind of over the top of the slides. Let's move you slightly. So when we ask questions about financial capability of mainstream Australia, the question is framed as, are Australians in control of their financial lives, and how is that assessed? ASIC, for example, and many others, financial counsellors, will ask, can you raise $2,000 in an emergency? And that's a pretty telling question for a lot of people. Do you understand specific terms? And one of the specific terms is, do you understand diversification of assets? You might also ask people, what's your knowledge of your financial position? What do you know about where your super is? And it's on the strength of those kinds of questions that you would decide whether people are financially capable and whether they're in control of their financial lives. They're not questions that you would ask most Indigenous people, and we wouldn't ask that for a whole bunch of reasons, not just because we couldn't raise 2,000 in an emergency, or that we couldn't answer some of those questions. There are certainly those amongst us who could. But we've just been doing some work recently with ASIC, talking to Aboriginal and Torres Strait Islander people about what does money mean for them. And it means safety, security, home, looking after family, looking after the community, and making sure that everybody's okay. We've been essentially excluded from the economy, as Charlene was describing, and as the report explains, purposefully, by policies, by laws, and by practice. Racism, lots of different ways we have been excluded from the economy. So the capacity for intergenerational wealth creation and all kinds of other things that others would take for granted is not there for us yet. So we have a different way of thinking about what money means to us. And certainly, as Flavio said, home ownership and different kinds of engagement with the economy and financial services like mortgages are becoming more commonplace. But we are on an upward trajectory, but it's a kind of, it's a slow climb up. So one of the questions that we need to ask in relation to assessing people's financial capability is about financial literacy. It is about what we know, but importantly, what we know from research, the small amount of research that's been done, and the anecdotal our engagement with Aboriginal and Torres Strait Islander people over the last 20 or 30 years in relation to financial service, it's about access. It's can you get access to proper mainstream banking services, to superannuation services, to good credit, credit that isn't at outrageous interest rates, and suitable insurance. How are you able to engage with that system? And that is largely down to whether the industry is really engaging and knowing its customers, engaging with its customers, and engaging with its members in the super space. And there is there's a big gap there, which is increasingly being filled by the financial services sector. They're really much more alert to that. Partly through the work of, 20 or 30 years ago now, Reconciliation Australia began that work. It began looking into this and researching it, and it began talking to people and bringing the sector together with Aboriginal and Torres Strait Islander people and financial counsellors and others in the sector to answer some of these questions, and to see whether Aboriginal people had the skills to engage, and did the sector have the skills to engage with its people. Really having a good look, as Charlene's alluded to in the report, alludes to the extent to which we are engaged in the economy, and so with need in the financial services sector. And which also comes down to, I know that, the issue that John will talk about next, do we have sufficient income? And certainly Charlene and Flavio and the report calls that out. If the extent to which you want to engage in any service is really also a measure of the extent to which you have the resources and the need. And if you're excluded, if you don't have sufficient income, that will also really impact on the extent to which you're engaged. But as I was saying, the sector, in the industry, financial services industry, has really lifted its game over the last few years. And so we have the Banking Code of Practice developed and monitored by the ABA, and also there's another group that actually monitors and does take complaints if there is a breach of this. And it's called out in chapter 13, it calls out a number of groups that need particular attention from the services, from bankers. Indigenous Australians, particularly those in remote areas, are called out as a group that need particular services provided. So they commit in the code to train staff, to provide accessible banking services, and to understand that not everybody is an English speaker as their first language. The banking code says that it also asks banks to do important things like in A. If you have to say you're Indigenous, you kind of have to get through this threshold of saying you're Indigenous. But if you do, then the bank is obliged to tell you about accounts that are best for you, low fees, low interest rates, and that are really suited to people who may not have high income. So there's that kind of suitability, less about trying to upsell products, and an obligation to actually think about the customer and give them a product that is suitable to them. It also has this undertaken to meet the identification issues that Aboriginal and Torres Strait Islander people face. If you're in an overcrowded house, if you have limited income, you're not writing off to births, deaths and marriages saying, can I have a copy of my birth certificate? Nor do you have anywhere to store it reliably for a long period of time. So, or you might have a name that is spelt in a complex way. It might have been misspelt by the person on the phone. So there are lots of identification of those formal meeting the 100-point identification issues for Aboriginal and Torres Strait Islander people. The Banking Code of Practice also says that banks will take into account remoteness and the issues that come up for people where they are living in remote areas, and that they will train their staff in cultural awareness. And I think the Big Four, at least, are absolutely, have undertaken and committed to doing quite a lot of that work. It's a big piece of work, but they are undertaking to do it and making some progress on that. AUSTRAC, our financial intelligence regulator, the anti-money laundering and the counter-terrorism regulator, has also done some deep thinking about this and made provision for banks and financial service providers to have different kinds of identification that can be acceptable, taking into account, of course, their own money laundering risk, so that you can't do something that is going to be open to fraud or that's going to be high risk either for the customer or the institution. But they've agreed that there can be more flexible kinds of identification methods, and some of the ones that have been suggested include Indigenous community identity card, which a lot of organisations have developed, a reference from a community elder, a reference from a board member, or a government letter that shows the customer's name. So they've really started to understand that it is disadvantageous for people, and part of the kind of exclusion that goes on if people can't, if we don't, have this kind of flexibility around identification. It's a great principle, and it takes implementation. So it really takes the financial service provider undertaking to implement this, train staff, get staff familiar with it. So it's not a silver bullet either, but it is progress so that people can be engaged. So that, if I'm in a community 500 miles from the nearest centre and my credit card or my key card goes missing, I'm not stuck without access to my money. I can, get money or get access back to my card and back into the system more readily than was the case a few years ago. I want to talk a little bit about superannuation and what it means for members. It's the one place, since the superannuation system was introduced, and those who've been employed since that time, it's the one place that we have really built up wealth that can be transferred intergenerationally if we don't use it, and all of it in retirement. Identification is an issue there, so that's really important. The superannuation industry has had to think about how accessible it is and how it engages with members, and it's been quite proactive. More the retail funds have kind of been really engaged in this. There are cultural issues that come up as well for Aboriginal people. The death benefit, the way the law flows for the death benefit may not always capture the people in a family that a person might want to give their money to, or that they might want to pass their money to on the event of their death. There might be a sister or another person who culturally is the right person for that money to go to, that the law doesn't acknowledge at the moment. So there's discussions going on about that. There are really serious issues about the preservation age, given our low, the mortality rates that we face. People, I think, people have said some, kind of throwaway comments about super, that who cares, we die before we get it. That's a terrible indictment on this country and our system. So it's a really live issue at the moment to look at ways to either change the preservation age. My preference is that we don't change the preservation age. It's like accepting mortality rates as they are, and that is, an unacceptable outcome. So there is talk about making early release more available to people in certain circumstances, and just loosening that up a bit to address that issue where people are at risk of not having the benefit of their superannuation because of our mortality rates. There's also, because we were talking earlier about the low rates of income Aboriginal and Torres Strait Islander people have. In July 22, the government's talking about removing the threshold that means that super only kicks in at $450 a month. So a month, that can be quite right. But anyway, they're talking about changing the threshold so that superannuation is more available to people on lower incomes. I just want to talk briefly about credit and insurance in terms of access and engagement. Often people don't have access to mainstream credit. They don't have a credit rating, and it's hard to get mainstream credit. It makes people vulnerable to payday lending and high interest loans, consumer leasing, so it can be quite vulnerable to that kind of unregulated high interest credit. And there's also been real issues for people around suitable insurance. And any of you that followed the Banking Royal Commission would have heard the stories of really unsuitable funeral insurance sold to people that had terrible outcomes for people. It's, I won't talk about it now, but it's all there in the hearings of the Banking Royal Commission. So we talk about the importance of education. It is really important that we are increasingly financially literate. But Charlene and the report tell us that the rates of straight out sort of adult literacy are not high, let alone finding numeracy and financial literacy, getting those rates up. So there are real challenges for us there, and there are people become financially literate when there are teachable moments, when it matters. So if you're not engaged in the economy and there is no tailored information to really suit your needs, and there's nothing happening, you don't have a mortgage, you don't have enough money to have a mortgage, or you can't access mainstream credit, you're kind of out of the system, and the teachable moments occur less often. Some of the financial institutions are increasing their skilled staff. Financial counsellors are some of the great sort of unsung heroes, I think, in this space. So skilled staff is really important as well. I just want to close on having talked a fair bit about financial capability of individuals and of the system to meet the needs of individual consumers and members. We're really, heading out into the, in large numbers and at scale into Indigenous business. We're making great inroads into construction, health, tourism until COVID, but in really becoming really significant, a big significant sector, helped a little bit by the Indigenous procurement policy. So we're really moving out into that space. We are big employers of our own people when we set up businesses. So and we're also very purpose driven. So we're often giving back to community. So it's a very interesting space that will really increase our own financial capability, our financial position, and our position as business owners. So I just wanted to give you that bit of a snapshot about the importance of not only us getting educated and engaging in this system, but of the system meeting us halfway. Thank you.
I'll first acknowledge the traditional owners of the land on which UQ, my virtual background, is based, the Jagera and Turrbal people. I'm going to address these questions. We've heard a lot directly about the concerns of Indigenous Australians, but these are issues which arise at a national and global level in a lot of contexts, which have a specific relevance, of course, to Indigenous people. And so I'm going to look at what we've learned globally about how to help economic participation, how to address poverty, and the answer is embarrassingly simple: to help poor people, give them money. Now, the fact that it's taken the labour of many thousands of development and welfare economists to push this conclusion might seem surprising, but it only takes a moment to realise that this is inconsistent with widely held beliefs. That, on the contrary, phrases like "you shouldn't just throw money at problems," of a variety of cliches, suggest that there's something wrong with this conclusion. It's taken a great deal of intellectual and empirical work to demonstrate that across a wide variety of contexts, the best way of helping poor people is to give them money without strings attached. I think it could fairly be said it's the biggest finding in welfare economics of the 21st century. the Nobel Prize recently awarded to Duflo and Banerjee, I think, reflected large-scale empirical work which broadly supported this conclusion. This is something that's applicable both in poor and rich countries, and therefore in particular to Indigenous Australians, the poorest group in a rich country. So I've said this is the biggest welfare economics discovery of the 21st century. So of course one might naively suppose that this would have a major role in Australian public policy, but in fact it's fair to say in this issue, as in perhaps some others, our policy looks as if we looked at the findings of economic research and then decided to do the exact opposite. I think it's fair to say in terms of determining what directions welfare policy in general and Indigenous welfare policy in particular have gone, it's clear that focus groups have much more influence than social science research. This has been true of both major parties, and I think we can summarise the directions of public policy in the 21st century as conditionality, compliance and constraints. And these three C's have hit Indigenous Australians harder than any other group. So first, conditionality, what does that mean? We have a range of benefits in our welfare system. I think it's fair to say nearly all of them have been subject to increasingly tight limits on eligibility. The unemployment benefit age, for example, has been raised from 16 to 22. We've had supporting parents' benefits have been cut off when children reach an earlier age. I think it's now down to 6 years. Limited access to disability benefits. We've seen repeated cycles in which attempts have been made to disqualify people from access to disability benefits on the basis that their disability isn't sufficient to stop them from working. I should mention, there have been positive developments such as the National Disability Insurance Scheme, which is not an income support scheme, but at least provides access to facilities. But in terms of income support, I think we've seen this direction. Most notably, the shift from CDEP prior to the Howard government to CDP. And although there's only one letter difference, these are radically different schemes. CDEP provided money to communities to hire their members to work on community projects at award wages. CDP is a particularly pernicious form of work for the dole, sufficiently bad, in fact, that the federal government has announced it's going to be scrapped. I think there has finally been some sign that we may see a move towards concern with actual outcomes rather than with what plays well in the polls. Compliance. So this is something which has been ramped up repeatedly. So the idea is a major concern that job seekers in particular are caught in the system in one way or another, that we need to keep on, keep the pressure on. This has been an issue for at least the last 50 years. I was unemployed 50 years ago or thereabouts, and the phrase dole bludger was just coming into use at that time. Onerous conditions for job seekers, 20 job applications per month. Now, there are currently more job seekers than vacancies on most measures. We no longer have a useful vacancy series, but worldwide evidence suggests it's typically the case that, except in very strong labour markets, there are more job seekers than vacancies. So if each job seeker has to put out 20 applications per month, that's a huge number of forms going into employers who have to sort through them and discard the vast majority of them. Work for the dole obligations have been started in the groups that have been most stigmatised in focus group type discussions, which is young people and Indigenous people, gradually extended through larger and larger groups of the workforce, with severe penalties for breaches. So relatively minor mistakes can lead to you being pushed off benefit. These compliance conditions were, of course, reduced and eliminated or paused during COVID with no obvious adverse effects. Now, the CDP, Community Development Program, has had particularly high breach rates, and therefore, as we've seen, substantial suffering with relatively little progress on the employment front, as the statistics Flavio read out to us show. Now, in terms of compliance, it's worth comparing welfare and tax. This is both public money that is owed to the government or given by the government. And in the case of tax, the government basically says to you, you tell us what you've earned, you tell us what your deductions are. If we see something that raises a red flag, we'll come and ask you about it. Otherwise, you'll just get your cheque in the mail according to what you've said. That despite the fact that it's well known that evasion and avoidance takes place on a large scale, particularly in the small business sector where the opportunities are greatest. An estimate of $11 billion of evasion and avoidance by small business per year. That excludes the kind of legal avoidance undertaken by big business and various kinds of dodges done by employees. That's equal to the total cost of New Start, the unemployment benefits name at that time at 2017-18. By contrast, welfare recipients are assumed to be cheating, the robo-debt fiasco being a prime example of that. Constraints, and this has been a particularly deplorable development which we've imported in some respects from the US. That is, once you receive income support, you're constrained in how you can spend it. And this has been reflected in income management, quarantining, most recently the cashless debits card. So these have been introduced again without any effective research into their viability or usefulness, simply on the basis of essentially media hype. We have, in this case, long experience with food stamps in the US. That name now has I think it's SNAP, which is, I won't try and work out what that acronym is, but there's ample evidence that cash payments are better at reducing poverty than either constrained handouts like food stamps or direct food aid. And so that I think is about as well established as any conclusions we could have in the area of welfare economics. So what's the experience of the pandemic? Well, we've seen higher benefits paid to many more people in Australia and elsewhere, very substantial reductions in poverty and hunger, without apparent large-scale evidence of disincentives or demoralisation. Of course, the pandemic has scrambled all sorts of employment relationships, has led to lots of people losing or leaving jobs on a far larger scale than before. But we're already seeing rapid recovery in employment. Every reason to think that, given appropriate aggregate fiscal stimulus, that the long-run effects on employment will be negligible. Unlike the experience, for example, of the 1990s, at the beginning, an early stage in this process of constraining benefits, where we saw a very, very slow recovery in employment following the 1990 recession. Really, no recovery wasn't really established until pretty much the end of that decade. And similarly with the GFC, a very slow recovery, particularly again in countries where a return to normal policies of austerity prevailed. In the US and Europe. Really, it wasn't until just before the advent of the pandemic that we could have be said to have recovered. So, in the general context of Australian public policy, I and a number of colleagues have been working on the idea of a livable income guarantee. This basically would take the existing welfare system, increase the generosity of payments to the level of above poverty level, and relax the eligibility requirements. So the first step would be to restore the parity of unemployment benefits with the age pension. Second, essentially use the same compliance rules for benefits as for taxation, but most importantly, particularly in the context of Indigenous communities, expand the kinds of contributions to society that count as deserving of income support. And so this wouldn't be fully unconditional, but it would allow a far wider range of activities. Full-time study, volunteering, and artistic and creative work are the typical examples we propose. And these are far more feasible for remote communities than the focus which drove the shift to CDP, the idea that remote communities with massive economic disadvantage in terms of location, that people there could be expected to obtain full-time market work. That was a I think always a pipe dream, and the attempt to turn it in reality has just created suffering without any real benefits. I'll mention, I'll skip over in time, but people can ask in the Q&A if they want the difference between this process, which essentially builds on the existing system but challenges the assumptions of conditionality, compliance and constraint, as opposed to much larger scale proposals for a universal basic income. I'll talk about that. What I mainly want to observe is that for Indigenous communities, livable income guarantee provides something which can be done in the short run to reduce poverty and deprivation, support cultural preservation and artistic activity, encourage participation and training, potentially perform the basis of a revived and improved CDEP, and remove the unreasonable and punitive aspects of current policy. Thank you.
Thank you, John. I realized that we just ran out of time, but I thought all the presentations were really great. With you all, I realized that some people may need to leave, but I would like to allow perhaps for 1 or 2 questions from the audience. And if I can ask you to type your questions in the Q&A box. But I appreciate that if you cannot stay, that you leave. And I'll just give a couple of seconds for, there are no questions at the moment. Okay, so what I'll do then is I will say thank you to all the speakers. Myself, I thought it was it was great listening to the 3 of you. I enjoyed that immensely, and I thank you again for participating, and I thank the audience as well for listening to us. Thank you all. Thank you.